Look at the Buffetts, the Bezos, the Jamie Dimons, they're all selling. So the insiders have the lowest, they're selling out of equities and they're buying commodities because who's standing for delivery for $89 billion worth of gold since the beginning of the year? 89 billion with a B has come into COMEX. Who's standing for delivery for that? So the insiders are moving to commodities and selling equities at the same time that the retail public has been shy to come into this market but is at all-time records in equities. What could possibly go wrong? And I'm thinking to myself, where else can you put money where there's value? Well, gold and silver got beat up so bad when everything else went so high. I'll ask you, why did they beat up gold and silver is the bigger question, because it signifies something deeper. And why are we seeing massive deliveries across the globe and central bank buying that continues to increase? And now the United States joining in on the massive influx of gold.
Andy Schectman, who leads Miles Franklin, a U.S. bullion firm with $10 billion in sales, believes precious metals represent one of the few remaining pockets of genuine value in today's inflated market. His perspective gains relevance as gold continues its upward trajectory, marking consecutive days of gains amid trade uncertainties, a weakening dollar, and declining U.S. bond yields. Schectman raises a key question. Why were gold and silver suppressed while other assets soared, especially as central banks, including the U.S., are now rapidly increasing their holdings? The answer may lie in the fundamental economic restructuring currently underway, as evidenced by America's unprecedented gold acquisition strategy. Perhaps most striking is the quiet but massive gold importation by the United States in early 2025. According to World Gold Council data, America imported more than 600 tons of gold from London and Switzerland in just the first 2 months of the year, a staggering amount that would make the legendary King Midas envious. While economists at major banks have dismissed this as a statistical oddity, the sheer volume suggests something more significant may be at play. Schectman's analysis extends beyond mere market observation to critique recent U.S. policies that appear more like sanctions than traditional tariffs. Referring to Trump's warning of additional tariffs for countries aligning with BRICS, he notes that such moves are only accelerating the very de-dollarization the U.S. seeks to prevent. Before we dive in, please take a moment to like and share the video with your friends and fellow investors. Don't forget to subscribe and tap the notification bell so you're always up to date. Your continued support helps this community grow stronger every day.
Someone asked me today, where else could I put my money that's good value? And I was thinking about it, the easy answer is farmland, but farmland's expensive still, just like the residential real estate. And it dawned on me that over the last 20 years, through suppression of interest rates, the only asset class, it seems to me, that was held down were precious metals, because it's the canary in the mine shaft. And we've talked a lot about why perhaps the military-industrial complex, in my opinion, was holding down silver. We know about Gibson's paradox, why they would hold down gold, the inverse relationship between it and real interest rates. But in all of that time in suppressing interest rates, the byproduct was distortions in asset prices, such as real estate, such as bonds, such as stocks. Everything went way up. Greatest bull market ever, because we messed with Mother Nature. So when you try and think of where is there good value, well, we just said the real estate market's not, the bond market not, stock market. It's interesting, when you look at the stock market, you have the largest percentage of retail buyers, mom and pop, in the market than ever before, including at the dot-com bubble. It's like 54% of all stock trades is retail-based mom and pop. At the same time, since the beginning of the year, you're seeing every single week institutional seller sell. Over $2 billion a week since the beginning of June, average selling. The insiders, six sells for one buy. Look at the Buffetts, the Bezos, the Jamie Dimons, they're all selling. So the insiders have the lowest, they're selling out of equities and they're buying commodities, because who's standing for delivery for $89 billion worth of gold since the beginning of the year? 89 billion with a B has come into COMEX. Who's standing for delivery for that? So the insiders are moving to commodities and selling equities at the same time that the retail public has been shy to come into this market but is at all-time records in equities. What could possibly go wrong? And I'm thinking to myself, where else can you put money where there's value? Well, gold and silver got beat up so bad when everything else went so high. I'll ask you, why did they beat up gold and silver is the bigger question, because it signifies something deeper? And why are we seeing massive deliveries across the globe and central bank buying that continues to increase? And now the United States joining in on the massive influx of gold and silver. Why? And to me, you say this and think, yeah, right, Andy, you own a gold company. Yeah, I do. But I don't know where else I would put my money. I can tell you right now, I have a managed account with Sprott out of my respect to Rick Rule when he was there for all of the years that he sent me his client's business. That was the least I could do. I don't even know. Eric Angeli is a great guy. I don't even know exactly what stocks he does, but I trust them. I have gold and silver. I own a metals company. I have no debt. And the only other place that I put my money, period, is in 4-week duration or less U.S. Treasuries. I don't know where else to put it, and I'm not the poster child for Finance 101. So yes, Dunnigan, buying gold and silver to me has never been more important. Ever, never, never. Regardless if you buy it from Miles Franklin or not. The peak in 1980 was 1-to-1, 1 ounce for the Dow. And what is it right now? What's the Dow at? 40 what? Let me do a little math real quick. The Dow Jones is at today 44,000 divided by 3,300. So here we go. 44,000 divided by 3,300. 44,000 divided by 3,300. 13.33 ounces. It was 1-to-1 in 1980. So yeah, yes, it's at gold is close to an all-time high in nominal terms, but nowhere near an all-time high in its relation to Dow stocks. And that would certainly preclude anyone from buying real estate or stocks at this juncture. And I think it's important to understand that what is the dollar worth today in relation to so many things. It's the dollar is massively losing value, and so the continual printing of dollars is masking as well the real value, because inflation is masked, the CPI is masked, and I don't trust any of that, to be honest with you. I think it's better to look at it in terms of gold versus Dow than what the dollar price is.
The global financial landscape stands at a potential inflection point as BRICS nations advance toward implementing a gold-backed settlement system. Andy Schectman has identified this development as marking a pivotal moment in the evolution of global financial architecture, with implications that could fundamentally alter international trade. According to Schectman's analysis, if BRICS nations fully open their gold settlement system to global participation, over 90% of the world's economies could potentially bypass the SWIFT payment system entirely. This would enable nations to settle international trade in gold through multi-jurisdictional vaults, rather than relying on dollar-denominated transactions processed through Western-controlled banking networks. Behind the scenes, massive volumes of gold are being transferred from Western countries to vaults outside the SWIFT system and Western regulatory frameworks. This strategic repositioning appears to be laying the groundwork for an alternative financial infrastructure that could operate independently of traditional Western banking channels. The movement represents more than portfolio diversification. It signals a coordinated effort to establish parallel financial systems. Even the world's top gold mining countries, including China and Kazakhstan, are prioritizing accumulation over sales, despite record-high gold prices. Their central banks are buying rather than selling, suggesting a coordinated strategy where immediate profits are being sacrificed for long-term strategic positioning in an emerging multipolar financial order. Let's get back to the interview.
What gold is doing in all of these vaults is not replacing the dollar, it's replacing what stands behind the dollar. It is a skeletal system, these vaults, of a whole new infrastructure, monetary infrastructure, and gold will take the place of treasury bonds. That is what, in my mind, it is doing. It is backing with legitimacy. The whole thing in the United States, done again, is that once we left the gold standard in 71, we were a system based on trust, and for a long time we were trusted and revered. And you could argue the last 4, 5, 6 years, that level of trust is waning. And I think the world has gotten tired of promises of a country that won't get its fiscal house in order, that continues to go around bullying. Trump says, you nations who do this with the BRICS, another 10% tariff. That's not a tariff, that's a sanction. This is what's pushing them all together to begin with. So I think Lavrov's comments are massive. If they do open this up to all of these other countries, you're talking 90+% of human population that will have the ability to trade outside the SWIFT system and settle in gold through a series of multi-jurisdictional vaults. To me, it's the biggest news that's come out of the BRICS maybe since day one, since I started covering it. I'm not hearing it anywhere, which is kind of strange to me. You're hearing a lot about the new settling in yuan and the multi-jurisdictional, but put it in the context of the BRICS, it's massive because it gives them legitimacy that they won't find with just having 10 or 12 or 15 countries. You now are talking about 160 countries, 170 countries. You're talking the majority of the world. And that should be factored into the equation and not, I think, overlooked. A lot of people are talking about what I am with the BRICS and with the new yuan settlement into gold, but I've heard no one talk about Lavrov's comment that they're opening it up to non-BRICS nations with the exception of the pound, the euro, and the dollar. Well, to me, that's about as big as it gets because that hits at the heart of the naysayers who say they're not big enough. Yeah, they are. If they open this up and allow, just like, for example, Switzerland was allowed to trade with the European Union with treaties, even though they never became part of the euro, it's the same thing. It's opening up trade with all of these nations, even though they're not the BRICS nations, they're trading with the BRICS nations because of this new settlement system. And if you realize that China's entire goal is this Belt Road Initiative and all of the countries within it, there's hardly a country on the Belt Road that's in the BRICS, one or two. But now you've just opened it up to 75% of human population, and all of these countries in the Belt Road are being industrialized. They're underdeveloped and they're resource rich. So China brings them into the fold, and all of a sudden you have all of these people and all of this growing infrastructure that is settling outside the dollar. And instead of buying treasuries, buying commodities and gold to offset that risk of holding treasuries. It's a monstrous thing for the rest of the world and very bad for the dollar. And it's one of these things because it's so drawn out, the little by little by little, and not the all at once, and people just dismiss it and poo-poo it. There will come that all at one moment, maybe long after we're gone. I don't know, maybe next week. I don't know. But if you don't see the little by little and the chess pieces that are being put into place, then you're not paying attention. But to your point, you got to dig. You won't find it on the evening news or on Fox News or anywhere unless you dig. As Chris Powell, I don't know if you've ever had Chris on your show before, but I always say that, Chris Powell, Bill Murphy, any one of us who own gold owe him and Gad a debt of gratitude. And Chris, if you're listening, thank you. But as he says, there are no free markets anymore, just manipulations. And the same thing is true with the value of the dollar. It's manipulated, as is the statistics by which we gauge inflation. So that's a more true measure of the value of the dollar, the value of gold, the value of a Dow, when you measure it against something that isn't just dollars. Measure it against gold, measure the Dow against gold, measure Bitcoin against gold, measure the S&P against gold, and you'll have a better value, a better idea of what true value is.
Gold has long been regarded as a safe haven asset, but its strategic importance is growing in today's increasingly complex and fragmented geopolitical landscape. Ongoing global tensions have elevated gold's role as a key store of value for both nations and investors, making it an essential component of a well-diversified portfolio. Amid rising uncertainty and shifting market sentiment, gold continues to stand out as a reliable asset. While silver shows signs of renewed momentum through bullish technical patterns, gold remains a steadfast monetary anchor. In an environment marked by financial volatility and continued central bank intervention, gold offers a strong foundation for preserving wealth and navigating a potential turning point in the broader commodities cycle. Could gold be entering a new bull phase with the potential to lead the precious metals rally? Share your thoughts in the comments. If you enjoyed this video, don't forget to like, share, and subscribe. Hit the bell icon and turn on notifications so you never miss an update. Your support helps us keep delivering the latest market insights to you and the entire community. Thank you for tuning in.